Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 11th of October, 2023. As always, we've got the 5 stories this afternoon that happened today that you need to know about. Story number 1. The S&P ASX 200 closed up 0.7% today to 7,088 points. That's 5 strong sessions in a row. Pretty good. Technology stocks, consumer discretionary and industrials led the way today. BHP, Fortescue Metals and Rio were all up around 1.5%. The banks were mixed. National Australia Bank and ANZ were higher, while Commonwealth Bank and Westpac were lower. Macquarie Group, Transurban, Aristocrat Leisure and QBE all rose by more than 1%. The laggards included CSL, Woolies and REA. Story number 2, there's plenty going on in international markets. There were reports out today that Beijing is considering a stimulus package for the Chinese economy, particularly to boost infrastructure spending. That pushed up the price of iron ore futures, which is the main reason the big ASX miners did so well today. In the US, more Federal Reserve members seem to be taking a softer approach on future interest rate hikes. That helped Wall Street rally. The Aussie dollar has been stuttering higher and is close to 64.5 US cents. Obviously, the crisis in the Middle East is top of mind, but Brent crude prices fell slightly over the last 24 hours, as did bond yields. Now, without going into detail, bonds are good places to be in times of uncertainty. They're a defensive investment. So, given the Middle East crisis, investors are buying bonds, pushing up their prices. Something's more expensive, your return or yield falls. In turn, that makes equities more attractive, hence Wall Street has rallied the last few days. Story number 3, plenty of corporate news around. The chair of Qantas, Richard Goyder, today said he'll step down, bowing to pressure from shareholders after copping months of criticism about the airline's performance. He'll leave after next year's AGM. The Commonwealth Bank held its annual general meeting and boss Matt Comyn was upbeat about the outlook for the Australian economy. Telstra said it plans to buy cloud consulting company Versant for $267.5 million to support growth and the digitisation of its business. Now, the deal is expected to be completed in about 6 weeks. Versant is a cloud computing consulting company. It connects big companies to cloud technology players like Amazon Web Services and Microsoft. The new business, including its 500 employees, will sit in Telstra Purple, the telco's tech services and consulting arm. Story number 4. Once a golden child of the share market, CSL has had a rough time of it in recent months. But today, Chair Brian McNamee said the blood plasma group remains a growth stock. The Chair also said no one likes seeing the group's share price fall. Well, it's down 18% since late June. That's a fair fall. At CSL's AGM today, 23% of shareholders voted against the executive pay report. Now, the new CEO, Paul McKenzie, could make close to 11 or 12 million Aussie dollars this year if performance hurdles are met. Dr. McNamee said that interest rates have grown much faster internationally than anyone anticipated, and that affects the cost of capital and share prices. He said, "I can't fix the macroeconomic challenges. All we can do is run a good business." He also said that CSL is never going to be a dividend stock. And finally, story number 5, a rise in costs has hit insurer IAG, in part because inflation has pushed up the cost of repairing car damage. It means profit margins will be at the lower end of expectations. It's the 3rd time in a year that earnings expectations at IAG, one of Australia's biggest insurers with brands like NRMA, have been weakened because of unanticipated shocks. IAG told investors at its annual general meeting today that it expects a stronger second half as it benefits from the earn-through of pricing. What's that mean in English? Basically means higher premiums, notwithstanding insurers have already pushed through double-digit premium price increases this year. In fact, I think IAG pushed through premium increases of up to 20%. More on the way. IAG also said the level of wild weather this year had been relatively benign so far. That's it for the afternoon report for Wednesday, the 11th of October, 2023. Michael Thompson and I will be back tomorrow morning with a Thursday edition of Fear and Greed Business News. I'm Sean Elmer. Enjoy your evening.